Warren Buffett predicts the Fed will make drastic moves. Watch these 4 stocks. Imagine turning your savings into a fortune. Today, we're diving into the crystal ball of one of the greatest investors of our time, Warren Buffett, and revealing how the Fed's next big move could transform your portfolio. Stay tuned to discover 4 stocks you can't afford to miss. Welcome back to Ace Wealth, your go-to source for finance education, personal finance, and investment strategies. If you're new here, hit that subscribe button to join our community of smart investors. Let's decode the financial world together. In today's video, we're unpacking the legendary investor Warren Buffett's latest predictions about the Federal Reserve's monetary policies and how they could drastically impact the stock market. We'll also spotlight 4 stocks that are poised to benefit from these changes. Whether you're a young professional, an aspiring investor, or simply looking to boost your financial literacy, this video is tailored just for you. Understanding the Fed's potential moves? The Federal Reserve, the central bank of the United States, plays a crucial role in our economy, primarily through its monetary policy decisions. When the Fed makes a move, it sends ripples across financial markets. Warren Buffett, with his decades of investment wisdom, closely monitors the Fed's actions. He predicts that upcoming policy changes could be more drastic than what we've seen in recent years. This could mean adjusting interest rates, which affects borrowing costs for individuals and businesses, or altering the money supply, which impacts inflation and economic growth. To delve deeper, it's crucial to understand the Fed's dual mandate, fostering maximum employment and stabilizing prices. In a scenario where inflation runs high, the Fed may resort to tightening monetary policy, which includes raising interest rates. This action, although necessary to curb inflation, can slow down economic growth. Conversely, in a low-inflation environment, the Fed might lower interest rates to stimulate economic growth, but this could potentially overheat the economy. Buffett, in his sagacious approach, is known for analyzing these shifts meticulously, gauging how they influence various market sectors and individual investments. Warren Buffett often emphasizes the importance of being fearful when others are greedy and greedy when others are fearful. This perspective becomes especially pertinent when the Fed announces significant policy shifts. Investors often react hastily to such news, but Buffett's strategy involves a more measured, long-term view, focusing on the intrinsic value of investments rather than short-term market fluctuations. This approach suggests that drastic actions by the Fed can create opportunities for discerning investors who can capitalize on market overreactions. Remember 2008's financial crisis? The Fed's response then was a game-changer for the markets. Now that we understand the potential scale of the Fed's actions, let's explore how this could directly impact the stock market. Stock market implications. The stock market is like a sensitive barometer, quickly reacting to changes in the economic climate. The Fed's decisions can either boost investor confidence or trigger caution. With the anticipated moves, certain sectors are expected to be more affected than others. Buffett highlights that industries sensitive to interest rates, like real estate and finance, might see more volatility. Building on Buffett's insights, it's essential to recognize that the Fed's policy decisions have a domino effect on various economic sectors. For example, a hike in interest rates often leads to higher borrowing costs, which can dampen consumer spending and business expansion plans. This scenario typically results in a slowdown in sectors like automotive and retail, which rely heavily on consumer borrowing. On the flip side, sectors like savings and loans can benefit from higher interest rates, as they can earn more from their lending activities. In a situation where the Fed opts for a more accommodative monetary policy, such as lowering interest rates or quantitative easing, we generally see a boost in sectors like construction and technology. Lower interest rates reduce the cost of borrowing for businesses, encouraging investment in growth and expansion. This environment can be particularly beneficial for startups and technology firms that often rely on debt financing for their ambitious projects. Buffett's keen eye for such sectoral shifts and his ability to predict which companies will thrive under different economic conditions is what sets him apart as an astute investor. Having looked at the market's response, it's time to zero in on the 4 stocks Buffett is keeping an eye on. Buffett's top 4 stock picks. Warren Buffett is known for his strategic stock selections. Based on his predictions, there are 4 stocks that stand out in the current economic scenario. These stocks span across different sectors, each uniquely positioned to leverage the anticipated changes in monetary policy. They include a tech giant known for its resilience, a healthcare company with groundbreaking innovations, a utility company with a strong track record, and a consumer goods brand with a loyal customer base. Further elaborating on Buffett's stock picks, it's crucial to understand why he chooses these particular sectors and companies. The tech company on his list, known for its robust business model and innovative edge, stands out as a leader in its field. In an era where technology drives growth, this company's ability to adapt and innovate positions it well for long-term success, regardless of economic cycles. The healthcare company, with its focus on essential life-saving products and services, offers stability and resilience. Healthcare is often considered a defensive sector, as demand for health services remains constant or even increases during economic downturns. This company's strong research and development pipeline and its history of innovation make it a solid choice in Buffett's portfolio. The utility company, known for its reliability and consistent dividend payouts, offers a haven for investors seeking steady income. Utilities are generally less sensitive to economic cycles as the demand for energy and water remains relatively constant. This company's focus on sustainable energy and efficient operations also aligns with the growing trend towards environmental responsibility, adding to its appeal. Lastly, the consumer goods company on Buffett's list benefits from a powerful brand and a loyal customer base. In challenging economic times, consumers tend to stick with trusted brands, and this company's diverse product range and strong marketing strategies ensure it remains a top choice for consumers. Buffett's investment philosophy involves looking at companies with strong fundamentals, good management, and potential for long-term growth. These stocks reflect those criteria and are expected to perform well in light of the Fed's upcoming moves. Now let's delve into why these stocks are particularly appealing in the current economic landscape. Analyzing the appeal of these stocks. Investing wisely means understanding why certain stocks are attractive, especially in a changing economic environment. The tech company, with its innovative products and services, is well equipped to navigate through economic fluctuations. The healthcare firm's focus on essential services makes it a stable choice during uncertain times. The utility company offers a steady dividend, appealing to income-focused investors. Lastly, the consumer goods company's strong brand and market presence buffer it against economic downturns. The appeal of these stocks lies in their ability to weather different economic conditions. The tech company's innovation-driven approach helps it stay ahead in a fast-evolving industry. The healthcare firm's essential services and strong R&D make it resilient to economic downturns. The utility company's steady dividend and sustainable practices appeal to income and environmentally conscious investors. Finally, the consumer goods company's brand strength and market presence provide a buffer against economic challenges. Each of these companies exemplifies Buffett's investment philosophy, a focus on long-term value, strong fundamentals, and the ability to thrive in various economic conditions. By choosing these stocks, investors align themselves with a strategy that has stood the test of time, proving successful across different market cycles. In conclusion, Warren Buffett's insights into the Fed's potential drastic moves provide a valuable lens through which we can view the stock market. By understanding these dynamics and focusing on fundamentally strong companies, investors can make informed decisions. To recap, we discussed the impact of the Fed's potential policy changes, how they might affect different market sectors, and delved into 4 specific stocks that Warren Buffett has highlighted as promising investments. Remember, investing is not just about following trends, but understanding the underlying dynamics that drive market changes. By doing so, you'll be well equipped to make savvy investment choices. Have you considered how the Fed's moves might affect your investment strategy? Share your thoughts in the comments below, and if you found this video helpful, give it a thumbs up and consider subscribing for more insightful content. Thanks for watching Ace Wealth. Stay smart, stay informed, and I'll see you in the next video.